What's happening, traders? So, today we will start up our price letters and just have a look at what the market is doing. Now, basically, we are somewhat of 2.5 minutes away from the New York Open. And basically, I want to include the recording of the New York Open. So basically, it is the time area where a lot of basket orders are, in play. Um, and a lot of traders advise or suggest even not to trade the first 3 to 5 minutes of the New York session for that reason, right? Because all the algorithms, all the institutions, all the big players that have placed, tens and hundreds, perhaps even thousands of contracts, in the market. Um, we will see that hopefully in a minute and a half when New York opens, because um, we should notice at some point that the market will become very volatile in the first couple of minutes. And, let's just see what will happen and if we can, get some nice trades, lucrative trades. So basically, I am recording this session to case study it, and obviously also for my journal and everything, right? Um, Now, if we look at the volume profile, which is all the way to the left, where all that big numbers with the green colored, well, bars, I guess you can call it, right? Horizontally. Um, and now we are about half a minute from the New York Open. So we see already that we have a little bit more activity going on already. And let's just see when the bell opens what will happen. And obviously, in any case, if you are either in a short or long position, right, it could be, dangerous, right, for you to get stopped out very quickly. And here we go, right? New York Open. And as we can see, immediately a lot of contracts are printed, right? We just jumped from, a couple of 10, 20, 30, in some cases, 90 contracts to basically 400, 600, contracts at the New York Open. And all right, so basically I see that these areas here at the top, right, the black colored background, are basically prices which have not been tested today. So let's see if, at some point buyers will, try to create a breakout, right? Now, for the time being, we can see that the price around, here at 22.75 to 28. It's basically ranging, right? And we can see a small slope here. First 2 minutes of the New York Open almost passed. Right, so price basically came down, and during that slope, it got somewhat, halted, right? We saw a little bit of absorption from the buyers, And after that, they were able to push the price very easily, as we can see, and very quickly to where it is now at 26. And now we start to see some absorption from the sell side, followed by a pretty aggressive attack, right? So at this point, I guess the most lucrative, position we can take advantage of at this point um, would be either, a breakout to the upside if price indeed decides to do that, obviously, right? Because if price stays here between those price levels that I mentioned earlier, right? Within that volume profile mountain, right? Then we could expect, yeah, let me put this one to the side like that. And I will start to point out things, right? So, yeah, if price decides not to go any lower, right? And if we can see a lot of, sell contracts being absorbed here, followed by backticking, as in not only the buyers will defend that level here, but they will also start to attack, right? And if price basically stays within that range here, we could look for perhaps a buy position, and to retest, let's say, the high of the volume profile, right? And at that point, you can either get out, profit from buyers who are looking for a volume profile breakout here, or you can, hold your trade, I guess, and hopefully to see a breakout here, right? So basically a volume profile breakout followed by a breakout at price levels where price did not, test those areas just today, right? So as we can see, the volume profile is thickening here. It was previously a slope. Now it's becoming more and more flat, indicating that, yeah, there is definitely a battle going on in this area, right? So it could act as a kind of support level, I guess, right? Now, we have also a point of control. However, if the sellers, let me quickly, yeah, like that, right? So obviously it can go one of two ways, either to the upside to make a volume profile breakout bullish, followed by a regular breakout based on, those price levels. However, if the buyers are not able to push the price higher and price breaks and closes below, let's say, that resistant area here, right? Support, then, like sellers may be able to push the price lower. And if that happens, then obviously, price may come down here. And if at some point it wants to break out, then this would be the ideal area for, to look for shorts, at least, profit 1, 2, 3, 4, well, 5, 6 ticks. We have a small pressure point here. So should we have a breakout at this level, 73 quarters, right? Then, yeah, the price can lead to a very nice and quick profit, right, into those levels. Now, obviously, if the volume thickens here and the price is not able to do that, then, as we can see, the buyers may go for a fade trade, right? As in, sellers fail to break out, buyers are starting to absorb and also attack, you know, because if buyers are able to buy here at the bottom of what is now becoming that extended area of this entire range, right, until 28 here above, then, buyers who will then buy here. And if the price keeps continuing higher to that 28 area, um, again, they will be very happy to get out at those areas, right? Because they will know that, okay, if price indeed should, continue higher, then obviously, they can make more profits, right? But they also know that at these levels, there will be buyers to look for breakout, right? So most likely they will place a iceberg order here, right? And as soon as buyers attack those levels, then those buyers who bought here, and as we can see, right, as I described earlier, the market is basically pushing higher at this point. And, when it gets there, then, these buyers will place limit orders to make profits and not risk for, the market to breaking here. Because at that point, there may be sellers here, right, who will start to defend those levels to, prevent that breakout, bullish breakout will happen. And now, obviously, you can enter here, hold your position all the way here if you are very confident that price will do that, right? But you have to keep in mind that, price may go in favor, I don't know, 10, 20 ticks, and then boom, it, may go quick, very quick against you, right? And then you basically will scratch your trade, no profits at all, while you could have had 20 ticks, right, at this point, for example. So, when trading basically with the price ladder, I think, getting in here, targeting, realistic 4 to perhaps 8 ticks, and if the market still does that, right, creates that bearish breakout, then you still would have made profits nevertheless. And if you can catch, 2 to 3, positions like that, let's say 8 ticks per position, right? And, if you can do that, let's say 2 times, right? It will be still 16 ticks in your favor now, depending on how many contracts you enter, right? Because one contract, one tick is basically 1250, right? So let's say you have entered with 4 contracts, it's basically $100 worth per tick, right? And if you can make 16 ticks, right, in a day, that's $1,600, guys, right? Definitely not bad. If you can do that 5 times a week, right? Just do the math, right? Still, you can have very lucrative days like these. And at this point, price is having a little bit trouble to go higher, and then it came down. We can see that here at the point of control, buyers were definitely preventing for the price to go lower. And now we have again somewhat of a battle here. But remember, guys, if we have a lot of, blue colored high numbers in the inside print, it means that the buyers, the momentum is definitely in the favor of the buyers, right? And even though price may come here, sellers, defend that level, attack a little bit, and now look at this, guys, right? So, and now basically the buyers are, able to push through that area, right? Because again, the momentum was in the favor of those buyers, right? So yeah, there may be a absorption, some backtaking like that, and at some point, it may go higher, it may come back, it may go higher, and at some point it just may break through, right? The likelihood of happening that instead of for sellers, excuse me, to push the price all the way down at this point is not as likely as buyers will be able to, break through here, right? Now, obviously, nothing is 100% sure, but that's why, we will also, along with the volume profile here, keep our eyes on, the bid, the ask levels, what is being printed in the inside print, where we can see, absorption backtaking, where, we can look for potential entries, to preferably play along with the momentum. But, every now and then, obviously, we could look for, I guess those counter trades. Well, short positions, right? And again, when price is moving like this within the volume profile, as I mentioned earlier, which is now basically from this level here, 18, all the way to 28, right? So the most ideal area for us to trade, right, would be either here for a bullish breakout or here for a bearish breakout. And basically, everything that is happening between those levels at this point, since of the volatility, I mean, sure, we can trade, right? But then we definitely would have to consult these guys here, right? And not only focus on volume profile. I mean, when I talk about this breakout here or here, right? Those are based on volume profile. And we would look at the battle or action that is going on between buyers and sellers. And based on what we read out of the raw market data, yeah, we can plan our strategies, right? Either for buy, sell, or perhaps even a sell or a buy here, as I mentioned earlier, right? Because at this point, like I pointed out, right, if sellers are not able to break out of that volume profile and push the price through this here valley, right, with a pressure point even here, then it's more likely that buyers will defend that level and try to bring the price back to that, volume profile based range, right? And as we can see, it was very close. It missed it basically by 2 ticks, right? And yeah, that is basically if that happens 1 time, 2 time, and the first couple of times we can, try to benefit from those moves, right? Even if it's a couple of ticks, it does not have to be, from here all the way up to here to make like 50 ticks, right? It will be nice, obviously, but it does not have to every time. And we can obviously focus for more ticks whenever those breakouts occur and or will play out, right? Whenever they happen, obviously. So now on the subject of volume profile, we can see here, obviously, this entire area, that range, right? These are the mountains. Whenever I mention mountains, it's referred to this, right? And these are basically valleys, right? And price obviously moves faster through valleys because there has not been many battles in those areas, right? So it's easily or more easy for price to go through those areas. Whereas here, obviously, we have a lot of battles going on. And then we have the pressure point, like I mentioned earlier. Should the price at some point decide to break out, right? We can short and then target, this area as a TP for a quick 4 to 6 ticks, right? Now, there are also areas which are called the no man's land. For example, let's have a look here, right? I mean, it may look like, a small mountain, small valley, small valley, small mountain, small valley, small mountain, small valley, and then, the big mountain, right? But, um, okay, now it's moving away. Thank you. But, yeah, let's go back here for a second, right? And, within the no man's land, everything can happen, right? There is basically no areas for us to identify as support, resistances, or whatsoever, right? Because technically, one could say that, looking at these amount of contracts and this year, I mean, 1350 and 1300, it's not that much of a difference, right? So this could be a very small mountain along with, let's say, this entire mountain, and where it eventually get thickens, right? But if, let's say, we have here the opportunity to buy, and that's my point, in no man's land, right? Price may come back into this range. This may be that support before continuing higher, coming into this small resistance, coming back, and do that a couple of times back and forth, right? Um, and it can be confusing whenever to buy or sell in those cases. Now, let's say price now comes, let's have a look what it is doing now at the top. Yeah, like here we go, right? I basically did not saw it earlier, but let's say, okay, price now comes here, right? And tries to break out, right? And, those are the areas where we then could definitely look for, let's say, buys instead of, those unclear areas here in no man's land. Why is that? Because in looking at the overall context, right, we can obviously have that followed by a, you know, uh, conventional breakout, right? Again, price areas where the price basically has not come yet today. And yeah, like price went, and now is obviously coming back into the pre-breakout area, and this is something that is called a fade trade, right? Because obviously, sometimes buyers will be able to break out here. Oh, that's a little bit thick. Let me make that smaller. Yeah. So basically, buyers will be able to break out here, and then at some point they will even be able to generate that breakout here, right? And sometimes, as we can see, again, like I mentioned earlier here on the E-mini S&P as an example, right? Instead of price for continuing higher, it may come back in, let's say, that, pre-breakout area here, or even if we look at where the previous battles happened in the volume profile, one could say even here, right? And that is exactly also what it did. And, those are obviously other techniques or strategies we can utilize, right? But again, it all comes down into reading the overall context of the market, identifying areas within the volume profile, what is happening here, right? What are buyers and sellers doing here? Are there really, battling against each other to win, or are they playing mind games with each other, right? As in, you know, how can I say it? Try to manipulate the price ladder so they can benefit basically from each other, right? And now this could be an area where we now could look for that breakout. Now that, and there you go, right? And this is basically how it's done all day long, right? That's why it's very important that we will able to read everything within the price ladder in the overall context with the market. And yeah, that's basically what we will look at this point. Now, let me see if I can catch any position at this point as well. First, let me center all the DOMs. And another thing that we can obviously do is, look at the indices and try to identify, which is the leader and which are followers, as in, from what I saw so far, excuse me, from what I saw so far, in general, right? The NASDAQ is more often than not the leader of the indices when it comes to, in comparison with the E-mini S&P, because it's way more volatile, right, than the E-mini S&P. And, the E-mini Dow and E-mini Russell, they can also be in correlation. But in this case, we see that the NASDAQ is at the top here, while the Dow is at the bottom almost, right? And the Russell, well, it basically is somewhere in the middle from the looks of it, right? Well, not middle exactly, more at the top area, bottom area, right? Where it is now battling in this volume profile area. So let's have a look here. Okay, this should be interesting. Okay, yeah. I basically, am left behind there, but that's okay. I will not try to chase the price. And as we can see, right, as soon as price moved very quickly, in a split second, right, to the upside, immediately we had a lot more action going on, where sellers basically stepped in and absorbed all those buying contracts. And if that creates fear among buyers, then what will they have to do? They will have to get out their positions, right? So let's say they have entered here, price moved away, comes back, right? And they have to get rid of their contracts. So they have to click here, right? And that will generate that, well, let's say downforce, that quick move to the downside. And if the buyers then again will be able to hold that level, it indicates that, okay, that move there is probably because scared money got along with, the sellers here to get rid of their contracts, and that caused that quick move to the downside. But if it does not continue to move lower within that same speed, right, and we can see, let's say, a lot of absorption going on here from the buyers, followed by attacks, then it's more likely it will continue higher. Now, how will this translate in a candlestick chart? Obviously, buyers were able to push the price higher, and then price came a little bit down, and then boom, they will again push the price higher, right? And that may translate what we saw earlier here, as in buyers pushed it higher to this level, sellers pushed it lower. And if the buyers are able to, defend, let's say, these areas here where price is trading now, then it may again continue higher and take out that previous high here, which could be a TP if we can catch an entry here at the area where, price is now basically trading, right? But as we saw earlier, if the buyers are not able to break out this area here out of the volume profile, it could indicate that, okay, sellers say until here and no more, right? So they, if we see this slope disappearing, as in becoming flat like that, right? Um, it indicates that basically that, yeah, those levels are traded, but if they cannot break through, it should indicate that there are sellers defending that level, right? And from there, it can go back to the point of control as it is doing now, right? Or again, like it did here, right? Um, Here, it could not break that low here, right? We had that entire volume profile based range, right? And it went all the way back to that area here. It could now not make a breakout, and now it can go back all the way, again here to now, be able to generate that breakout, or, just retest the low again. Now, if it has done that 1, 2, 3 times, like I mentioned earlier, right? We were at the bottom, it came all the way here. Now, the same thing, it may, instead of going down all the way like that, right? It may just come down a little, go higher, come down a little, go higher, come down a little, and then boom, it can eventually, break out of that area here, right? So we have to keep an eye on the price levels until where it retraces every time, right? Let's say it is now at 26 and a half, right? It goes to 27 and a half. It comes back to 27, right? It goes to 27 three quarters, right? It comes back to 27 1/4 and keep doing that, then yeah, that can add a lot of, confluence to the fact that if price breaks out of this volume profile, which is about to happen here, depending on what now will happen between the buyers and sellers. So let's center our DOMs for the time being. Right. So we can definitely see that sellers are attacking, and now buyers were able to bring the price with 2 ticks higher. And now look, right? 1 tick by the sellers to the downside immediately, let me, okay, that's just one contract, by the way, but that's fine. Let me put here another position, because should the price not able to break that high, let me extend it, by the way, a little bit. If it is not able to break that high, and ooh, okay. And as you can see, sometimes it just may not, take me out with profit, right? At that level, it may come back. And now it all depends on this year, 29 1/4, right? If the sellers are able to push it to 29, I could get out at least with 2 ticks, right, of profit. Um, but, after that, obviously it may, push to the upside. But now I am seeing a lot of absorption, right? Sellers are attacking, and, yeah, and that's me out of my position, right? Just guaranteeing 2 ticks of profit. And let me, by the way, change this to 3, right? Let's have a look. Right, so you see, now we can able here. Oh, that's a shame. it did not trigger my position at, and now it keeps going, right? And that's fine. I mean, it all comes down to, are you willing to take a market order or a limit order to, well, not limit your risk per se, but um, and now we can see here at the top, right, that buyers are still present and sellers were able to attack a little, but the buyers basically absorbed everything at that level. And then again, it moved a few ticks to the upside, and now it's coming back again around those levels. And as soon as price gets there, right, buyers are attacking to prevent, for the price to go lower. But at some point, if they notice that, let's say these orders here, and you look, you see how quickly those disappeared, right? Now, if those orders were quote unquote real, as in they stayed there and they absorbed all those buying contracts here, then presumably buyers will get out, right, at these areas who are still in positions, right? But obviously that did not happen, and it gives the buyers even more, a confirmation to keep attacking, right? Taking market orders to push the price even higher. Now, why would the buyers then get out of these areas, you may ask, right? And good question, because look at this, guys, right? This here pressure point area. If the price is able to go very quickly from 32 and a half to 33 and a half, right? It is also able to do that the other way around, right? If it's here and it fails to go higher, as I explained earlier here with that example, right? It may go very quickly through these areas, generating even more buyers to getting stopped out of their positions. Or if they get out manually, they will have to, click here on the sell side. And that may also generate that push to the downside, right? Because then the scared money, may cause that move. But as we can see, the buyers are still definitely present at these levels. So, should the price not be able to go below 33 and a quarter, right? It may indicate that, yeah, the buyers may still be interested in pushing the price higher, right? Let me see here if I can catch a position. I think I was, you know, too late placing that limit order. I already could have had 4 ticks, right? But sometimes that's just the way it is. Let's see, I can see here. Okay, now my position is triggered, but I think it would have been a wiser decision to cancel that order and first observe what is happening here, right? And as we can see, ooh, this may be dangerous, but I will let it play out, guys, nevertheless. Okay, because I thought it may go very quickly through that area here to the downside. And that was exactly my point earlier. So I can show it to you guys, right? But now, you know, hmm, interesting. Buyers can not push the price higher. And now they were able to do that with very little volume. So it should at least, hit my target if it intends to go higher. But now, right, if the price had gone lower than 33 and a quarter, I, well, the best action to take would be accept the 4 tick loss and get out, right? Because again, it may go very quickly here. But as you can see, right, it basically came down here to 33 and a half. And basically, it was not able to go lower. And now, look, we have bigger numbers printing here in the inside print, right? So, okay, I did not get filled, even though price got there, right? And now, obviously, I can get out of my position, retake a position here. But now, look at this, guys, right? This is exactly what I mean. So it is very important, to make strategical decisions at this point, and decide to get out, right? If the price breaks that 33 and a quarter level, right? I rather get out with 4 ticks, right? Instead of my, stop being exploded like this, right? But that was definitely a good example of not what to do, right? um, yeah, it was just to like recognize it whenever they happen, because as we can see here, as soon as price got there, right, at 33 and a half, sellers attacked, and the buyers were unable to push price higher. And then the sellers attacked again. And at some point, like, many buyers will realize exactly that what I pointed out earlier here, as in the price may go very fast instead of our stop being exploded, right? Let's get out like this. And that also obviously will generate again that very quick move to the downside, right? Because the scary money moves to the part of the price ladder where it will support that idea, right, of going through that area very quickly. Now, obviously, I have my position still running, but it is not the position I'm focusing on, right? It was just exactly that example, what I wanted to show you earlier, guys. Now, we can, also see here, right, at the bottom, basically when price went through that area here, the volume profile again got thicker, right? And as soon as sellers, yep, okay, TP hit, that's nice. But as soon as the sellers attacked very aggressively for the last time, buyers absorbed everything and attacked aggressively back. And as we can see here, right, and slowly, gradually, it picked up the pace at some point, and again, now created new highs, right? So exactly as I pointed out earlier, price came from all the way around these levels. It came here, it did a little bit this, it came here, it did a little bit this, and then it took out this high, right, like that. And then at some point, it came back into this area. And now, if you would like to visualize it like that, this could be then your support, right? And after that, price basically took out this here high to create a new high where it is now, right? So that will basically be what you would see on a candlestick chart, right? But now, obviously, this is now all happening on a minuscule level, right? And that's the beauty of the price action on the price ladder, right? To study it, to learn from it, to master it, and eventually trade based on the concepts of order flow, auction market theory, strategies, techniques, and methodologies which we can apply. And it's definitely interesting. And, let's see what will happen here, because we had a little bit of absorption here. But look, the Nasdaq has just broke the highest, and if the Nasdaq does that, this may follow, right? So let's see if the price comes back to this here level. It may cross it, but if it does not, perhaps we could look for an entry at the bottom, because here it is now a little bit dangerous. I see a lot of absorption. So if the sellers are really present and are willing to push the price lower, then, they should be able to do so by very quickly going through that, small area here, which is now also thickening. But yeah, I just basically entered too quickly as soon as price, ticked one tick higher to 36.25 or quarters, right? But I should have watched for more absorption first and back ticking, like it is doing now around these areas, right? Okay, so let me put another 3 contracts here, like that. Okay. So basically, if the price now should continue higher, then our TP will be hit, obviously. But if it breaks now through this area, I mean, yeah, it can go very violent against me, right? Okay, that is nice to see, right? Here at the bottom, again, we had a lot of absorption, and look at how quickly, with, very little volume, basically, the buyers were able at least to push the price to that, well, let's call it mini range high, right? It came to the bottom, it came to the high, and from there it again came to the bottom, right? And at some point, either it may do this, obviously, right, go through this area to retest this mountain, or obviously it may do the opposite, right? That's why it's very important to look at the volume profile, but also at, the raw market, right? What is happening. And, now price came here, and it may do this, it may come back, and at some point, it may go higher to take out that high, or to take out this high in return, right? So now it came basically back, and let's see, I see a lot of buyers are attacking, but you saw how quickly the sellers were able to backtick, right? Or attack back, and push the price back into that range. Now, obviously, um, the right thing to do here is, as soon as price goes one tick against you, uh, and if you can accept a 2 tick loss, then you should, or could at least decide to get out with 2 tick loss, right? Why? Because the price moves slower, remember, through those mountains, and faster through this area, right? And now that I'm mentioning that, I'm not seeing that the price is going fast enough, right? So if it now again comes back, at least I should be able to make that decision, strategical decision, to get out with 2 ticks loss, instead of hoping that it will still hit my TP at some point, right? Now we again see a lot of, sellers attacking, but this time buyers are absorbing, right? And they are also attacking back. So, and you see, now we have a little bit more battle going on. This here volume profile is thickening, right? And basically, yeah, and that is again my TP hit. Very nice. Um, and now that the price again is somewhat around the highs, right? The volume profile here is again thickening, right? So it could indicate if we see indeed a lot of absorption going on here. And looking at the Nasdaq, it is already far, far away from the top, back in that volume profile, right? But if the Nasdaq can keep up this level, right, then the price still may at least go and retest, let's say, that range high of this area, right? And it may do the same here at some point. Obviously, that's why we have to keep an eye on things, right? So, yeah, it is very excited, and things go very fast, like the Flash, right? And it requires to constantly monitor everything. So, yeah, at some point, it can wear you out, right? At least your brains. So, um, but at some point, you may also get used to it, I guess, right? If you spend like 3 hours a day, 4 hours a day, just looking at the price ladder, yeah, at some point, your eyes and mind will start to adjust, and it will be just the speed that you should be worried about, because most of the time these days, obviously, there are a lot of HFT traders, especially, those who trade the price ladder, as in high frequency traders. And most of them obviously are algorithms, but for that same reason, traders who trade the price ladder not necessarily always target 20 or 30 points, right? Let alone, I don't know, 300 ticks for one position. I mean, it may happen once in a lifetime, and it's very beautiful to see that, obviously. But since, those HFT algorithms are very present on the price ladder or order book, traders have to adjust somehow, right? Just to survive, let alone win against those guys, right? So that's why most, professional traders who actually trade based only on the order book or price ladder, um, they don't have like 20, 30 ticks, profits, right? I mean, they just, keep their eyes on the volume profile, obviously the price, right? And these areas, right? And if they can put a strategy together, like I said, right? Let's say a price comes here, it does one attempt, two attempts, and it does not, break out this volume profile here, right? And if it comes back and at some point, the last attempt, everything is absorbed by buyers, buyers start to aggressively attack. Um, you can at least go for 4 ticks, right? Or if you are a little bit more confident, you can obviously extend it to perhaps 8 ticks, 10 ticks. If the price never, uh, has done that, concept, right? Especially if it's the first time, then, it may retest the high of that volume profile base range, and it may even generate that, breakout here again, right? But as we can see, price went very quickly through that area. So first it came here, and now it has built an obvious battle area, right? So this could be now act as a sort of resistance, I guess. And again, these mountains, valleys, and these areas here, they all have to do with order flow and auction market theory. I will not dive too deep into details today. But, if we just go like that, just center it. Um, yeah, while I was talking, the price basically came immediately back into that area, right? So if the price is now unable to break it again to the downside, and we see absorption here at the bottom of that range, we can definitely look for positions. And if I had, right, let's say at 33 three quarters, look, I already had 1 point profit there, right, or 4 ticks. Um, but yeah, that's just very nice to see whenever those things play out in front of us, right? Um, Now we see some block trades here. Let's see that if the sellers are attacking the buyers, if those disappear, well, um, if that's the case, obviously it may be spoofing, but if they do not disappear, then it could be buyers, showing the sellers that they are prepared to defend that level to scare off sellers, right? And if they do that, if sellers are starting to pull out, then obviously the buyers, ooh, very nice. And then the buyers will be able to, bring the price higher as it did now, right? Um, Now let's see, let's place a 4 tick, 1 point profit, even though it may smash through and go like 10 points. I don't care, right? The objective is just to, look for positions around areas that is supported by the overall context of the market. And like I said, guys, if we can do this, 2 times a day with a couple of contracts, I'm taking 3 for obvious reasons at this point, right? But I will explain that later on, why I'm starting out with 3. And now we see that, we have a little bit of difficulty to bring the price higher. Also, the volume profile was thickening. Yeah, so, and at some point, yeah, here we go, right? So, another breakout, right? Prices now again testing price levels, which were not, tested before. And as soon as price came, right, we have again absorption. Now the price is coming back into the pre-breakout area. And from here, again, we can start basically all over, right? As in looking what is happening. If the price indeed shows any sign of, the continuation of the breakout, right? I see. Okay. Let me just go here. 36 three quarters, and again 4 ticks, right? I'm just going with 4 ticks every time. I see a absorption, that's good, but oh nope, that is not what I would have liked to see. But as we can see now, the sellers are attacking less aggressive, right? And now we can see that the buyers are, defending that level and starting to attack a little bit more aggressive, which in return caused the sellers to pull out some contracts because obviously they know that if they had entered short here at the top of that volume profile base range, and they tend to bring the price again to the bottom, and they notice that basically the buyers will be able to, continue the momentum. Obviously, they will, have to get rid of their contracts due to risk management, right? So they will have to place again here their contracts, and that will generate again, a small push to the upside, as we saw, which delivered me another 4 ticks profits. So basically at this point, if I pull up my window very quickly like that, my account info window, right? Now, remember, guys, this is basically sim trading, right? It is not real, but it is definitely real, as in for me preparing myself to trade in a certain way, to prepare myself for a funding challenge, right? And the funding challenge that I will apply to in the near future, I first liked my funded futures personally the best, right? In my opinion. I mean, they have, no consistency rule, no scaling, end of day drawdown, and, all the above, right? But and this is very unfortunate for me, right? Um, they have a um, no micro scalping rule, which basically means that it prohibits me to trade this way, right? Because their micro scalping rule basically states that if I enter into a position on the indice, let's say NASDAQ, um, I cannot get out of my trade earlier than 15 seconds, right? So if I get in and 5 seconds later I hit my 4 ticks, right? Let's say that will be considered, micro scalping, and that is the only thing that they have a rule on, and they prohibit it, right? So well, very unfortunate for me, because again, personally, I liked from everything, my research until now, my Finland futures the most, right? I mean, um, but you have to apply to a futures prop firm, I guess, that basically, suits your need, right? The best. I mean, sure, my funded futures, in my opinion, are the best when it comes to a 100K expert account, for example, right? Again, no consistency rule, no scaling plan, no, end of day drawdown, and etc. Right? But that one rule that they will not allow me to enter on the E-mini S&P, generate 4 ticks, and they require a minimum of, I believe, 5 points, even, right? So 4 times 5, that is basically translated to 20 ticks. So it is not suited for my trading style or approach, right? And again, I can be lucky at days, I guess. I take a position here and then boom, right? Like we have, 5 points at this point, and I will get out of my position. But in the meantime, as we saw earlier, the price may go from here. I may enter. It may go all the way to here and then come back, stall a little bit, go back lower, and then basically stop me out, generate a fake breakout, right? Or failed breakout, and then eventually it may go all the way back, right? As I, explained earlier, which all has to do with order flow and auction market theory, right? Obviously, we have to look at the overall context, like I said, right? The volume profile, bid and ask level, inside print, and look at this, guys. I mean, this is just a dream happening, right? If one could have entered here, right? As I also in the beginning of the video mentioned that, if all the confluences with the context aligned to take a position here, especially if price reaches for those new highs, right? Instead of 4 ticks, you can just, trail your stop loss every time price makes 4 ticks. You can trail it, right? At some point, obviously, you may get stopped out at 8 ticks, sometimes 12 ticks, perhaps. Other times, you may go for 16 or 20 ticks and still be in your position, right? And basically, yeah, entries are an art of itself, right? But risk management, determining when to get out and making strategical decisions, that's, equally, if not more important, right? Because every tick counts basically when you trade this approach, with level two data and order book and everything, right? So we can see definitely some absorption here with a lot of aggressive attacks by the sellers. But, the sellers at this point are unable to push the price lower, right? So if, the buyers will at some point pull out because they realize that the power of the sellers at this point is too strong, then they will have to get rid of their contracts, put it on the sell side. That will generate down movement. And we have a very small, valley here with even pressure points. Yeah, so price may come back. It may come back even all the way down here and then still continue higher because the overall momentum, as we saw since the beginning of my recording, what did price do? It basically only pushes higher, 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 creates, keeps creating new highs, even though, yeah, we have every now and then a pullback, but it's all part of the game, right? And that's why I think if we trade, a few contracts for a few ticks, few points even, we can definitely at least generate some profits even in times when we are wrong. Well, when I say wrong, I don't mean necessarily that, okay, I'm planning to, take a buy position and, target, let's say, 2 points, as in 8 ticks, right? And then price makes 4 ticks and comes back into that area, goes back here, does a fade trade, as in it fails to break out and continues higher again, right? So um, just with 4 ticks, even if price goes against me at some point, I can still generate profitable results, right? And that's the objective of trading, right? To generate consistent and profitable results in a manner, in a disciplined manner, and respecting your approach and strategies, techniques, and methodologies, right? And as you can see, right, price came, it basically prevented sellers to go even lower. Battle happened, volume profile got thicker, and now, boom, again, even through this level, right, 42 and a half, like there was absolutely no selling contract printed even on that level, right? And now we can see that sellers are trying to aggressively attack at where the price topped out, right? And at some point, yeah, buyers were absorbing everything from the sellers, right? But absorption is one thing, right? If they do not start to attack, then if there is a big player or sellers who see the opportunity to short and want to front run, they will only get more motivated, right, to attack buyers because at some point they will have to clear at least one tick, right, as in one price level. And as soon as they clear one tick and they see that these limit orders slowly but steady start to pull out, then they will give them only more motivation to push price lower, right? However, if they, by they I mean obviously if the sellers are, uh, like I mentioned earlier, are able to push the price one tick lower, right? And then price goes one tick higher, 2 ticks lower, 2 ticks higher, one tick lower, 2 ticks higher, 2 ticks lower, 3 ticks higher, and so forth, right? That is what we call, backticking, right? It every time takes out a new high, and at some point, those sellers who basically did enter at around these areas, right? If they see that the buyers are gradually picking up the price, then they will have to get rid of the contract by taking limit or market orders here, and that again may cause for the price to push higher and test new areas, right? And Now we can see that, okay, we have definitely a number here that should be interesting, could act as a kind of resistance, right? Um, and this area could act as somewhat of a perhaps support, right? Within basically this small mountain here. Um, and what we would like to see is obviously either these levels will hold, right? If the sellers attack, buyers absorb everything, these contracts will get bigger and bigger, and they also will attack those areas, right? Then obviously we could look for buy positions to, bring the price again to this level and perhaps followed by a breakout even, right? And now obviously if the price is able to push out of that volume profile here, like that, yeah, and if it comes back and now, whenever the buyers are attacking, sellers absorb everything and aggressively attacking back, then obviously it is the other way around, right? Then buyers will have to get rid of their contracts. It will, generate and push to the downside. And perhaps that will motivate more sellers to take market orders because they know they can make money very easily if it goes very quickly, right, through this area to, let's say, this year pressure point, right, at 38 and a half. And that's basically, how we can look at it. And look, this is exactly what I described, right? Sellers were able to push it lower at first, right? But now price came back into that area, basically that range here, right? And now it started to go lower and absorption from the buyers, very aggressive attacks, right? So let's see if we can indeed take a position like this at this point, right? Yeah, I should have basically taken it here with a limit order because now it may leave me, but that's fine. I was just, wanting to show you guys another example. But let's go like this to see. And yes, sir. Here we go, right? So, and now let me go here with my TP because as we can see, it is very quickly at my TP, but it does not. And now it did, right? So that's basically another 4 ticks, right? With 3 contracts. And now it is again at that resistant level here, right? Again, buyers are attacking very aggressively, right? To break through that area, but they got absorbed, right? And sellers basically um, were attacking back. But now, look, the number are getting smaller while this year is getting bigger, right? So this can mean 2 things, right? Or the sellers are attacking with a iceberg order, as in, 50 contracts, 30 contracts, 100 contracts, and so forth, right? They are not showing their entire hand because if they will attack, then obviously all the buyers here will get rid of their contracts. And sometimes there are, traders who are trading based exactly on that. They are flipping, right? So, but that's another story. I will explain that later. But now the price is again at the bottom, right? We see a little bit absorption, but the buyers are unable to attack. The price therefore made 2 ticks to the downside. Will it break out? And in this case, it just did, right? And now it is just 1 tick away from that pressure point. So it should be able to go very fast through that area. But, at this point, yeah, it is a little bit difficult, right, for the sellers to push the price any lower. Now, let's see if indeed the price can keep pushing higher. Okay, so it came 3 ticks higher, and now the sellers are, able to backtick again with 2, 3 ticks, right? And now aggressive attack from the sellers, right? And now the buyers were unable to, absorb that, right? That's why price is now moving very quickly to the downside. And exactly my point, as I showed earlier, right? Because sellers will get motivated after seeing if the buyers are unable to defend that level, right? And they can bring it down with 1, 2 ticks, then suddenly everyone will get on a train, right? And then price basically just drops very quickly through that, valley until it reached that pressure point, as I told you earlier, showed you earlier, right? Here at around 38 and a half, I believe it was. And yeah, at this point, you know, um, it is getting a little bit thicker here. So uh, the part that I would like to address at the no man's land is a little bit tricky to trade because, and when I say that, I mean it in relation to the volume profile, obviously, right? We can still observe everything here in the bid and ask and the inside print, right? But let's just see what will happen because these trades definitely are a little bit more risky to take. But at some point, I think, if you have enough experience, well, I'm not claiming I'm doing right now because I'm still learning, right? But I definitely notice a progress, which is good. And but if you are obviously a more experienced trader than me, I will get there at some day. I will master everything in relation with price ladder trading. That I believe. But if you are trading like 10, 20, 30 years and you started out even in the bits, you know exactly what the price ladder is, how to trade it, and what to look for. I mean, it's just like, someone driving a car as if, the steering wheel or the entire car for that matter is just like operating their hand or fingers, right? It's so easy for them. They could do it in their sleep, right? And while others struggle, obviously, just to uh, move the car, right? Uh, Stupid example, but yeah, I just had to need a reference, right, in layman's term, I guess. But back to trading. Now let me try to catch one position. I see interesting things happening for a potential buy, but I also notice that sellers, yeah, you see, um, let me try to explain what is happening here. Sometimes sellers will deliberately lower this number to see if buyers will attack, right? And then they can bring up the price 1 or 2 ticks very easily. But after that, boom, the sellers bring the price down with 4 to 6 ticks easily, right? And, that is basically how this game is played, right? Because sometimes they will call each other out or bluff. And, if the bluff is not real, then obviously they will notice that and play accordingly, right, against each other. But if they do realize that, oh, it's not a bluff per se, then, total different outcome, right? So, yeah, I think. Yep, here we go. I just took a position at 38 3/4, and let me just, instead of 4 ticks, let me try 6 ticks like that. I do see here. Well, it's obviously not a pressure point of any sort, but it may be attracted to that area because I see also a little bit of block trades, which could be spoofing. So, meaning if the price gets closer to that area and those selling contracts at, 40 quarters, 40 and a half, all getting pulled out, then it's very possible, right, for price to go higher because it will motivate buyers to keep, continue to attack. But let's just see. Well, I really don't like the pace. Obviously, it should be able to go a little bit faster through those areas. And now it did, right? After these huge contract prints in the inside print, sellers got the, understanding of the buyers that, yeah, they will try to push the price higher, right? And now it's basically again, even though within that no man's land here, right? Where it may look that, okay, we have a small mountain here, small mountain, and then valley, valley, valley. Well, I mean, I guess that's one way to look at it, but me personally, I will just say that this is a entire mountain at this point, right? And let me see here. This could act as a small mountain, and this could be somewhat of a valley, but because the volume is not too big of a difference, right? If we look at here, 2,600, 1,600, almost 2,000, 2,200, 2,300, and all that. Here, 2,600, right? And now it's thickening, but previous volume was not that much, right? So, yeah, I mean, if it leaves this mountain, it may go back to this mountain, but it also may, not do that, right? And come back here and, stay there for a while, find the fair value, trade within that area, few ticks, and at some point, find new value, perhaps followed by again another breakout of those highs, right? Um, so very, very interesting. Oh, look at this here. I think this could be a level to look for a potential buy position if and only if I see absorption, which is now happening. If the price now ticks to 43, then I could consider a entry because I think this is just spoofing and scare the buyers, right? And preventing them from attacking. But on the other hand, it also may, a trader who is at this point executing the lure technique, right? Now, I have explained this already in a couple of other videos of mine. Basically, what the luring technique is, right? We have, a buyer who wants to buy here at this level, for example, right? And, if there are, let's say, sellers here with a little bit bigger contracts, right? Either it's spoofing or real, right? Basically, it is this buyer, right, who places sell limit orders here, um, so that other people, basically, who want to front run, right, like this 500 contract, um, they will sell to that buyer here. He absorbs all the contracts he can, and the tens, hundreds, or even thousands of contracts. And as soon as he has reached his desired amount of contracts, he will pull out this one or multiple, you know, dummy orders, right? Like that, he will pull it out, and then the market goes in a split of a second, you know, very, very fast, a couple of ticks to the upside, right? Because he makes sure that if he is buying big here, uh, you know, mm, these will be only his sell contracts, right? Um, and that's why, he places basically contracts on the sell side, stays, all the way behind in the queue, and so that other sellers who want to front run, they take market orders here, and that buyer here is very happy. He will have them because that is exactly his intention, right? And as soon as he has, fulfilled the amount of desired contracts, he will pull out these dummy orders, and then the market will just boom go very fast, and a couple of ticks to the upside. Um, that is basically the luring technique. So let's just see what will happen then. I'm still in my position. I was talking, not even paying attention at which level I was. Obviously, I will not do that whenever I'm live trading, but since this is basically sim trading, I am able to do so, right? I did not put my target even, right? Yeah, otherwise, my target already would have been hit, right? But then obviously it was just 24 contracts, and we have here 124. So I would still not gotten filled, right? Um, and, let's just see. But that huge order that I was talking about of 4 to 500 is now disappeared, right? So basically, that already may have been, the luring technique, short version, I guess, right? And at this point, let's see if, we will, because I see here block trades immediately disappear as soon as sellers are attacking. So now these are probably dummy orders here, right? So perhaps it's the same player, right? First he buys, and then boom, moves the market very quick here to the upside of that range high, and then he basically flips right into selling, and now he is basically selling and doing the same thing, stacking, spoofing orders here, and then observing all the buy contracts here. He will have it, and then after he has reached his desired amount of contracts, pulls out all these dummy orders, and then boom, the market now falls to, let's say, this here, what is now being created, right? The bottom of that, range here. And now that it has come back, you see, we again start to see some big numbers appearing on the sell side, right? So he may do that obviously a couple of times within that range, and he has obviously the money, the capital to do so, right? Other players, there's like a guy who is famous as the flipper, right? And from what he does in trading is, okay, if he knows that there will be, let's say, buyers here who want to have a breakout, but there will also be sellers here who will try to defend that level, right? Let's say we see here 115 contracts, right? So what he will do is, okay, if indeed the market, drops from this area, what he will do is he's basically the one who has 100 contracts. The other 15 contracts, those are 15 individual persons, right? Or, perhaps 2, 3 persons. So he knows that the majority of those sell contracts are his. And if the buy, as soon as he gets there, the buyers gets there, he, will take one tick loss, but because he knows that the majority of his contracts were his, he will then immediately buy where he got stopped out from the sell side to the buy side, and then make up 4 ticks, 5 ticks for that 1 tick loss he had earlier here, right? And he may do that obviously on both sides, right? Um, if he knows that, okay, now let's have a look. We have, 100, let's say 130 sellers here, right? Uh, of those contracts, he has basically 100 contracts here, right? And now he will basically see if this here will cause a reaction, as in if there are sellers who will look for front run, right? And if they do, right, then obviously he will get in and he will make money along the way, right, to the downside. But now, the buyers are at that price level and even get here. And now, he knows if my contracts are 100, the other 15 contracts are basically from sellers who had not the power, right, to hold that price level. And as soon as the price goes 1 tick against him, he will get out, accept that 1 tick loss, immediately place, if he had entered here with 10 contracts, he will now enter with 20 contracts here and go for that 4 tick move and make, not only up for that 1 tick loss here for 10 contracts, but make profits along the way and then some, right? And that's basically, how you can apply, I guess, also game theory to the whole auction market theory, right? So very, very interesting indeed. And now, guys, I will basically end the session so far, the recording, because it was not actually a session to show how many profits I made and everything, right? But at this point, nevertheless, we are now 1 hour and almost 33 minutes into the recording. Now, obviously, the first half hour was me just, talking. So basically, this would be the amount of profits that I would have made were this the 100K funded account from Top Step, right? Now, obviously, they have a scaling plan. That's why I entered first with 3 contracts. But I believe I at some point added another 3 contracts when price got to a area where I thought this is better, to enter. So yeah, that may have been the case. But basically, what the scaling plan is if you, pass your funding challenge on the expert account for 100K, you will get 10 contracts, right, to be able to trade with. But you will not be able to trade the entire 10 contracts, right? I believe the first $1,500 profit, you can only, trade 3 contracts. The next, 1,200 or again 1,500 target level for your profit, you will be able to trade 6 contracts, or and so on and on. And as long as you respect their consistency rule, as in, if your, let's say, profit target for the expert account is $8,000, right? You will have to make not more than 50% of that total amount, right? Otherwise, they will say you're not consistent, and then, they can apply a higher end of day drawdown to your account, which basically means that perhaps if you would have had made $1,000 today, tomorrow, the day after tomorrow, you have consistently made $1,000 a day, and you will be only, be eligible to fit that criteria for the consistency rule, right? And let's say you made like 1,000 today, but let's say 10,000, right? Tomorrow, even though you had made a lot of profits and hitting your target, they will say you're not consistent. So you cannot draw out any money just yet, right? So those are things that you have to keep in mind and I'm basically, you know, finding out about everything, what their rules and regulations are, so I can prepare myself the best as possible. And at some point, I will basically do these kinds of trades as if I were um, already trading under their rules and regulations after applying for a 100K funded account, right? But we will get there. This was just, a quick video. Well, not quick, but a video that basically showed you guys what kind of impact the New York Open can have on, the indices, how we can see that reflecting in the price ladder as in the raw market data. We have looked at the volume profile, everything, how traders are reacting at certain levels by consulting our bids and ask levels, the inside print, and the entire context of the market, basically. And yeah, it's definitely interesting, right? So I hope you guys enjoyed this video, and only good things ahead from here. Yeah, it's Friday, well, afternoon here in the Netherlands. So I wish everyone a blessed weekend in advance with their families and loved ones. And I will catch you guys in the next video.